I will check after this at our. Okay, I have shared my screen. Can you see it?
Okay, yeah, we can see.
Yeah. Okay. Okay. Good. So group assignment. Okay. So I want you to check whether your name is here or not. Huh? Okay. So far we have 1, 2, 3, 4, 5. 5 groups. So everybody are here in the groups list of the groups. Anyone yet that left behind? Tak ada So semua ada dalam ni. Okay. So okay, shouldn't be a problem later on. So I hope everybody are here. Okay, 5 times 3, 15. Because we have a 15 students in our class. Okay. Okay, done with that. Okay, let's continue with IT chapter 1. I want to continue with the last part of the slide, which is the business cycle. Then after that, I will proceed with chapter 2. Okay. Wait for a while. Do you have class yesterday?
Yesterday, yes. Ada.
Okay. Ada. Pagi petang ada.
Yep.
Okay. So you're full. So this morning, do you still have class?
Yes, doctor.
Ni
So about every 2 weeks, your weekend will be full with class, isn't it?
yep.
Okay, morning and afternoon. Okay. Luckily, it is not every week. Every 2 weeks, then should be okay, isn't it? Still manageable. If every week, and then quite burden. Okay. So for this course, I don't want to burden you. I will highlight only the important element that relate to us. Okay. I think we have done with this. Finance principle, all the principles related to the entrepreneurial finance. Okay. This one, successful venture life cycle. Okay, the life cycles of business. Business life cycle. Okay. So basically, there are about 5 cycle of the business. Let's just concentrate on this slide. Okay. We have a development stage before we start our step to the business. Okay. To develop the business first. Okay, so after that, after we because in the development stage, it is basically started with the idea, and we do some research, market research, research on the customer, research on the all the maybe the obstacles. Okay, in this stage we can do a research, maybe the advantages and disadvantages of the proceeding the business. Okay, and also maybe we can also investigate the demand, the market demands, okay, towards the product that we want to do. So development stage, developing opportunities and seed financings. We also look at what are the potential financing that we can have in the market. Okay, and we need to decide whether we want to use our own money or we find financings, external financings. Okay, so after that, startup stage, okay, where the business is going to be started. So gathering resources and startup financing lah. So resources here, there are many types of resources, not only financial resources, but human resources, and also property resources. Okay, if we want to run a business online, so we also need to find the online resources, the medium that we want to set up, whether we want to set up using FB ads or any lah, we use apa nama dia, online medium to market. Okay, in terms of marketing, in terms of collecting or managing our business online. Okay, and then after that, when we already started the business, so survival stage, how to survive the business. And then rapid growth to further develop and to further enhance the business, and after that early maturity stage. We'll discuss this one by one, okay, after this. Before that, okay, let's go back to the previous slide. Okay, the development stage period involving the progression from an idea to a promising business opportunity. Okay, last time we discussed about the idea. We need to have idea first, and we need to have objective to become entrepreneur, not only to achieve profit but to create a value, isn't it? The value that we can contribute to the society, to the community, so that people will look at our we look at our products later on, needs our service, for example. So because we provide value to them, value like we assist their life, we something that need okay, by the market. And then after that, startup stage period, when the venture is organized, developed, and an initial revenue model is put in place lah. Okay, so in this stage, we have started to put to plans all the costs, the expenses involved. We plan to get expected returns on the business that we just started. Okay, then after that, this one we need to think on how to survive the business. Okay, period when revenues start to grow and help pay some but typically not all of the expenses, because at the startup stage we actually there is outflow, very big outflow of money. Okay, and then in the survival stage we started to receive inflow of money to our business. Okay, so we started to pay all the financings, to pay all the debts, the not the receivable, the payables accounts. Yeah? And then after that, rapid growth stage period of very rapid revenue and cash flow growth. If we fail to survive in the survival stage, we will not able basically to have cash flow growth lah. So make sure we have passed all these stages before we come to the maturity stage, where we can sleep very well at night. Okay, at the starting stage, basically we couldn't sleep at night. Okay, this one couldn't sleep. Startup, it's so hard to sleep. And then survival still, we need to think further on how to survive the business, and rapid growth, and we start to sleep calm at night. Okay, period of very rapid revenue and cash flow growth. At this stage, people have started to accept and then actually to appreciate our value, the value that we provide to them. Okay, whether in terms of products, whether in terms of services. Okay, and then maturity stage, after that, the period when the growth of revenue and cash flow continues, but at a much slower rate than in the rapid growth. Bila rapid growth ni macam we going to open a new branch, ada new share partner, a new venture, and then other investor comes to invest in our business. Okay, So after this, at the maturity stage, maybe at this stage we have accumulate a lot of wealth. So we think about to transfer or to sell our business to other party. Then we generate, we can have a lot of income from that. Not income lah, we profit from selling the business the maturity stage. Or we become a sleeping partner, other partner will run the business. Okay, we have gone through done this selected financing definition. Okay, so this one uh, okay, this one is a types of financings for the startup. Okay, the financing here is financial sources to start the business. I don't know why the topic is suddenly appear here. Okay, never mind, we just discuss. Okay, so there are many types of financings. We have a seed financings, we have startup financings, we have apa nama je, venture capital, we have a business venture capitalist, we have a business angel, we have investment banker. All of these are types of financing that we can have in our business. Okay, so seed financing, seed is a seed lah. Funds needed to determine whether the idea can be converted into a viable business opportunity or not. Okay, fund yang mula-mula sekali, funds that we want to convert our idea to becomes a business. Okay, so this is the first fund that we need. Usually seed funds will come from our own pocket money or from maybe our family members. It is we call informal financings. Okay, like compared to the formal financing, like funds financed by the bank, microfinancings, or by the co-nationals. That one is formal, more formal. Why? Because of we need to fill up very formal, a lot of documentations needed. Okay, and then the requirement is quite strict compared to the informal financings. Kan, like we borrow from our sister, our brother, no document needed. Maybe they might need to they might need us to sign maybe just one piece of paper that state that we owe their money and we need to pay at this date and when, isn't it? Okay, it is informal financing. So seed financing basically informal financing lah. Why? Because it's very hard for the banks to just give to finance our business without any proof that we have started the business. Seed financing is suitable for the first time, okay, to start the business. Okay, that one is informal financing lah. So startup financing, funds needed to take the venture from having established a viable business opportunity to initial productions and sales. So after seed financing, we need to have a bigger amount of funds, okay, to further establish the business. Like we want to hire one or two or workers, okay, to help us on the administrative, for example, and then we want to buy some asset like chairs and tables, or we want to apa nama dia, sewa tanah ke, sewa buildings ke, rent a buildings or lands, for example. So we need to have a bigger amount. Okay, and then after that, venture capital, early stage financial capital, often involving substantial risk of total loss. This one bigger. Okay, the financing becomes a bigger and bigger lah. Venture capitals, this one capital is modal kan. Okay, so venture capital is a capital. It can only come from our own money or savings, and also it can come from our business partner. Okay, so venture capital lah, they put some money like a 10K or 100K to venture into the business. Memang ada substantial risk lah of total loss. Yelah kalau the business fail, there is a risk because the amount is big here. Venture capitalists, individuals who join in formal organized firms to raise and distribute venture capital to new and fast growing ventures. This one when involve a bigger business. This one relate to the people that put their money, capital, that invest their money. Okay, it becomes a more formal and organized firms, big firms lah. Okay. And then business angels. This one also types of financing that we can have. Wealthy individuals operating as informal or private investors who provide venture financings for small business. Who knows? Maybe God give us these angels, the rich peoples that suddenly comes and want to invest in our business. Then we call business angels, because angels usually give us a very good things, isn't it? They comes suddenly and then wanted to invest. Investment banker, individual working for an investment bank who advise and assist corporations in their security financing decisions and regarding mergers and acquisitions. This one when maybe it will happen at the later stage, not the initial stage lah. Like in the cycle, when we want to grow the business, then we can contact the investment banker or advisor that connect us with the bank or financial institutions that can provide us financial support. Okay. Okay. First rounds of financings relate to the business cycles. Okay, first rounds of financings, the startup financing, the startup cycle. So equity funds provided during the survival stage to cover the cash shortfall when expenses and investment exceed the revenues. First rounds of financings. Okay, so first rounds of financings when we have started the business. The business already started. The seed capital is there, and then the what else? We have seed financings and startup financing kan. Okay, yang ni. Development stage we already passed. Startup stage we already passed. This one we have our own money. So to survive, then after that we look at other external funding. So we call first stage of financings after the business is started. Okay. So first stage of financing or first round of financings will be provided during the survival stage. So usually the coin will help. So in this case, when we want to apply this type of financing, we have to show the proof that we already a success. We already conducted the business, and these are our cash flow, income statement. They want to see that. So if our cash flow is not good, is bad, and then we fail to provide income statement, so very hard to get financings lah. Okay. And second round of financings when the business become bigger and bigger. So in the rapid growth stage to support investment in working capital, we find more external parties that wanted to invest in our business. Okay. Mezzanine financing, funds for planned expansions, marketing expenditures, working capital and product or services improvement. This one, this special needs. Okay, the mezzanine financings lah. Okay, when we want to expand our business to open new branch, or we want to venture into online marketing, all the expenses will be financed in this types of financing. Okay, bridge financing, temporary financing needed to keep the venture afloat until the next offering. bridge financings. Like say we are, it's happened that we are shortage of funds to grow. Okay, so bridge financings lah that can help us, like government policy that strengthen the micro entrepreneurs, the small business, like say to buy a new machines. Okay, so this type of financings will help the entrepreneur. And then after that, this one bigger, for the bigger company, initial public offering. They can issue this one, a corporation first sale of common stock to the investing public. So investment. Okay, they offer investment to the public in order to collect a fund from them and then to start the project or the business. They call IPO lah. This one more formal. Okay. And basically IPO is advertised at newspaper. Okay, so season securities offering, the offering of securities by a firm that has previously offered the same or substantial similar securities. Securities here is a paper of investment. Okay, when people have apa nama dia, nak cakap, a surplus of money, they want to make investment, they buy this security. This security will promise them a certain percentage of profit. Okay, this one considered investment by the public. Okay, life cycle approach to teaching entrepreneurial finance. Okay, so in this course lah. Okay. Creating a structure, I think no need lah this one. Okay. This one is okay. So we just stop from here, the cycle and also the types of financings. That's it for chapter 1. Any questions so far?
No, Doctor.
Okay, no question.
No, Doctor.
Okay, thank you. So far clear?
Yep, clear.
Okay, so can we move to chapter 2? Okay, because we have a lot of chapters here and we only have 6 weeks. Maybe the chapter that doesn't need a lot of explanations, I will give just a exercise or video to you for you to study. Okay, chapter 2. Yeah. Okay, until chapter 13. This course. The earlier chapter is quite important. Chapter 2, yeah. Okay, after we finish with chapter 2, I will explain a bit about the business canvas. Have you heard about business canvas before this? Pernah dengar tak business canvas? Pernah dengar? Business canvas is a summary of the overall business, the important element that the entrepreneur need to take care of, how to run the business lah. Just a summary, which part ada human resource, ada marketing part, ada accounting part, okay, the capital, then the connections, the distribution channels of the business. Okay. Okay, never mind. We just okay. Let's proceed with chapter 2. Ini je lah ya. Okay, chapter 2. Okay. Okay, various types of apa tajuk chapter 2 ni? From the idea to the business plan. We want to prepare a business plan from the idea. So in chapter 1, we discuss what is the entrepreneurship, the objective of entrepreneur, the business life cycle, the types of financings. Now we want to plan the business, okay, from the idea to the business plan. Before we plan the business, we need to know, okay, we need to know the various types of firms, what types of business, what types of organization that we want to set up. Is it we want to set up ourselves alone, like apa nama dia, milikkan tunggal, kan? Proprietorship, or we want to set up a partnership business, or we want to set up a limited liability company. So we need to know all the types of firms, okay, that it is offered lah, that practice in the market. Okay, because different types of firms, organizations will have a different treatments in terms of liability, in terms of asset, in terms of profit distributions. Okay. Okay, now concentrate with the various types of firms. We have salary replacement firms. Ni bukan firms. After this, we discuss different formal types. This one informal types. Like we just imagine that we are going to start. Okay, then we need to think whether these firms will become a salary replacement, meaning to say we want to quit from our job, our current job, and then that the business will going to replace the salary that we receive. Okay, like we receive 5,000 per month. So the business that we're going to start will give us 5,000 per month. Then we call salary replacement firms. Okay, firms that provide their owners with income levels, okay, comparable to what they could have earned working for much larger firms. Okay, salary replacement. Ataupun want to set up a business but just side incomes. Okay, you will still continue with your current job, but this business is just a hobby, based on your hobby, and then just a side income. Okay, lifestyle firms that allow owners to pursue specific lifestyle while being paid for doing what they like to do. Okay, lifestyle firms that allow owners to pursue specific lifestyle while being paid for doing what they like to do. Okay, like uh, our lifestyle now, like we are sport person, we are sport person. Okay, so we are thinking to open a sport attire shop or sport, apa nama dia, barang-barang sukan, kan. So while opening this business, we still continue to become a sport person. Okay, so meaning to say the business relate to the lifestyle. Or a housewife want to start a nursery, a childcare center, so that she can take care of her kids at the same times. Okay, so what types of firm that we want to have? Or we want to set up a business that totally separate from our lifestyle. Okay, so that that's all need to be plan and things properly. Okay, and entrepreneurial firms that are flows and performance oriented as reflected in rapid value creations over times. This memang macam we want to open new branch of KFC, or we want to venture open a new business with our friends, business partner. Okay, that nothing to do with our life, nothing to do with our current job. We just want to start a new. Okay, where I need to admit. Okay, that, yeah. Okay. Okay, then after that, components of a sound business model. So whatever it is, the business must be able to generate revenue. Even we want to set up a business to replace our current incomes, but still it should be able to generate revenue. Okay, and then make profit, and then produce free cash flow. You must generate cash flow inflow that exceed the net working capital. Whatever it is, this one must be obtained. whether the business is based on our lifestyle, based on our hobby, because it is a business, must be able to generate profit. Okay. Best practice of high growth, high performance firms. There are three areas based on marketing practice, financial practice, and management practice. Maksudnya there are three important area that need to be taken care of. Okay, to ensure the business is success in terms of marketing, in terms of financial, and in terms of management. Okay, because the flow I just follow the slide that provided by the textbook. Okay, so best practice the marketing side, the business must able to deliver high quality products or services. High quality product or services must provide a value, a value to the customer lah or to the user. High quality of product. So the first thing first in marketing is not the sales people. Okay, it is not the mediums, but it is the products of the business or services. Okay, if the business selling the product, so the product must have a high quality. Or if the business provides services, they must have a quality services delivered to the customer. That's the first thing in marketing. If the product or services is not in quality, it is very hard to market the products. Okay. So kalau the sales, the marketing people points the best wine in the world, but the product is not in a quality, susah juga, susah nak berjaya. Yang biasanya food yang sedap, even though it is for it, isn't it? Because nowadays people not that value the quality products, the good one, not only the price. Okay, not only the cheap price. If the price is cheap but the product or service is not quality, then people do not look at it. And then develop efficient distribution channels and superior service support facilities. After that, the final point, barulah distribution channel, barulah the agents, barulah the sales person, and then the facilities. But the first one is first, second, third, all about products. Okay. Okay. Sorry, anyone? Okay, sorry, you can't see the slide. Can't see the slide, yeah.
Yeah, doctor, it just gone.
Suddenly, since when?
No, a few minutes ago it just disappeared, and then we just see you talking. But no
Okay, okay, never mind. I will adjust. I don't know why suddenly. I didn't. Okay, wait, yeah. Okay, without the slide, you still can hear my voice, isn't it?
yes, doctor.
Can see now? Can see.
Okay.
Okay, lah, good. Okay, so okay, we're done with the marketing and financial aspects. Okay, just remember there are three important elements. The first one is marketing, second one is financial, and third one is management. Okay, so management. We have done with marketing and now is financial. So in the financial aspect of the business, the entrepreneur must be able to prepare detailed monthly financial plans. It's not yearly. Even though we only look at the apa nama dia, financial reports at end of year, isn't it? But the entrepreneur, the business owner must detail out all the expenses, the cost, the financial aspect of the business, monthly financial plan, not report. Okay, before we report, we must plan. Okay, for the next year and annual financial plans for the next 5 years. Meaning to say all the financial aspect must be planned early. Okay, usually the business or the firms will have a strategic planning for the business in all aspect. Okay, so financial plan is very important for the business owner, for the entrepreneur, or for the even for the employee to have expectations, to have a target next year, what they want to achieve. Okay, this is the plan. Eh? And then anticipate and obtain multiple rounds of financings as the venture grows. Okay, there are many. Eh? And then efficiently and effectively manage the firm's asset, financial resource, and operating performance. And then plan and exit strategy consistent with the entrepreneur's objective and business plan. If there is, they need to exit the business. Okay. So this one in the financial aspect. Okay. Then, are you clear with the financial aspect? It's very straightforward, isn't it? In terms of monthly financial plan, okay, so later on in your assignment, because you are going to prepare apa nama dia, business plan, isn't it? So there will be a financial aspect. So need to prepare a monthly financial plan. So every month, then from January to December, then it will become a yearly financial plan. Okay, for the business. Okay, not financial report, but financial plan. It's more important. Eh? Because financial plans will provide detail on whatever we want to achieve. Whereby financial report will provide a detail on whatever we have achieved. So if we have prepared a financial plan earlier and we have financial report, then we can compare whether we have improvement, whether the business have a growth or not. Huh? Okay, and then the asset need to manage asset, financial resource, and operating performance. Why? Because all of these elements can consider basically involve a financial money, the funds that the business have. Huh? Okay, then financial in terms of management, assemble a management team. Must have management teams. Okay, balance in functional area coverage and industry market knowledge. So financial teams basically we need to have financial teams to help to monitor all aspect of the business, human resource, the accounting aspects, uh, what else? In the marketings and sales and marketings and compliance, audit, okay, like a big firms, okay. Okay, if the business is small, it doesn't necessarily, it doesn't show that there is no need for the owner, for the entrepreneur to cover all the compliance, the sales, and okay, it is similar with the bigger company actually. Okay, all aspect need to be taken care of. Yeah? And then employ a decision-making style that is viewed as a being collaborative, and identify and develop managers that support entrepreneurial endeavors. Managers like orang kanan of the CEO, we need to have a very a good managers actually, okay, to help to manage the business. And managers can also managers for apa nama dia, accounts, finance manager, isn't it? What else? Apa? Marketing manager, HR manager, and then assemble a board of directors balanced in terms of internal and external members. When the company become big, where there are investors, and also we need to have a board of director. Okay, the one that have a voice to direct the business. Okay, like if a small, maybe we as business owner with a business partner becomes a board of director. Okay, so it can be internal and external members. Okay. Okay, so time to market and other timing implications. Business opportunity exist that most ideas have a relatively narrow window. Sometimes ideas are ahead of time. This one more elements lah to ensure the success of the business. This one to ensure the success of the business. So the entrepreneur must find or search for the business opportunities. Okay. The business opportunities is in real times, not business opportunities that stated in the book or in the paper. No, it is in real time and in real place. Kat mana? Kat mana dia? When? Is it during the COVID or before the COVID or after the COVID? Okay? So it cannot be lack of time. No, cannot. The times and place is real. Where? In KL, in rural area. Okay? Is it online? Okay? Then most ideas have a relatively narrow window of opportunities to become a successful business venture lah. So the idea is our idea. We must narrow it down. We must have our specific target on the idea. We cannot just welcome any ideas and it will distract our idea. Okay, narrow window of opportunity to become a successful business venture. Narrow down the ideas. And sometimes ideas are ahead of their times. It is not on time. So people will not, it is not marketable. So it must be on time. Like we want to sell face masks during the COVID. So it is on time. People actually search for it. Okay. Or and then before COVID, nobody concerned about face masks, isn't it? So if we sell face masks at that time before the COVID, maybe in 2019, early 2019, no, it is not marketable. Kan? But starting to 2020, it is marketable. Kan? So of course, being first to market does not necessarily ensure success lah. Like now, there is a COVID, we want to introduce a new products that can replace a face mask, for example, that can cover both the whole face, including eyes. Okay, that is good. It is good. Become the first in the market, but it's not promise. It is not it don't necessarily ensure success. Tak semestinya success. It depend on us how we market it. How depends on the value of the products. Okay. Okay, so initial litmus test, viable venture opportunities this one the initial test. Kalau dalam research we call a pilot test before we run the final test. Before we really start the business, maybe we want to have a short, very initial test to market our products. Itu yang the existence of tester kan. Nak buat new product, we test. We give just a free to the public to test our product. So after that, we run a SWOT analysis. Okay, we find the strength of the product, the weakness of the product. We receive feedbacks from the publics on the products, and then find the opportunity and the threat. Okay. Okay, screening venture opportunities. Venture opportunity screening, assessment of an idea, commercial potential to produce revenue, growth, financial performance and value. This one still in the development stage. Want to develop the business, we do a screenings. After we run a market testing, we screen also. Assess lagi the idea. And the approach is qualitative screenings, interview with the founder, like we want to introduce apa nama dia, we want to sell a burger for example. Okay, so interview yang the existing business owner that have success in the same products, okay, the same segment. Okay, we do a interview with founder. So burger, for example, Ramly Burger, they interview the founder, how they run the business, how they sustain in the market, and then we take a lesson from it. Okay, learn from the success entrepreneurs. Okay, and then quantitative screenings, VOS indicator. What is VOS indicator? Okay, we will go after it lah. So 4 factors categorized initially by evaluating a potential venture's attractiveness, the big picture, know the customer, production and development challenges and financial fortune telling. Jadi tak apalah ya. Okay. Yang this one is we interview the success entrepreneurs. Okay. This one or the element that we can ask them more questions related to the business to learn from the success, their success. Okay. Okay, VOS indicator. VOS indicator is attempt to quantify the following areas. Okay. Apa VOS nanti lepas ni cari attempt to quantify the following areas. This one tips from US actually because the textbook is from the US. We learn from them, we take the good one, we do not follow the bad one lah. So we quantify the industry, the market that we want to venture. Market apa? Is it food industry? Is it service industry? Spa industry? Or any types of industry, the market, the segment, the market segment, and we also quantify the pricing, the profitability, what the price that we want to put on our products. Is it a cheap one? Is it the luxury product and luxury price, and then profitability and financial or the revenue harvest and the management team. Supplement rather than replacement of basic qualitative yang interview ni. Okay, meaning to say yang ni kita buat deep analysis lagi. Kalau bagi letak price ni, and then what are the profit that we can gain from it. Okay, more quantitative part, ada calculations. Okay, involve calculations lah. Yang interview tu is qualitative. We gather information from the experienced entrepreneurs. Okay, this one example lah that given by the textbook. Industry market relate. This one example related the quantitative part, the VOS tu. This one industry, tengok potential attractiveness, market size potential, average 20 to 100 US. This one dibagi lah range. Then venture growth, banyak growth. This one we need to calculate and we need to expect. Okay, so how to come up with this percentage? We ask the experience, the existing entrepreneurs, how they growth, what the percentage of their business growth, and then we do to our business. Then market share and entry barriers. Okay, is it any barriers to enter into the market? Is it a lot of competitors already in the market, so it become barrier to us, so that we thinking of to supply or do other products, not to proceed with this product because the market is really competitive. Okay, so that kalau kita yang newcomer ni not easy to compete with the existing one. Okay, kita like say macam KFC kan, KFC dah compete dengan McD, so compete lagi dengan apa nama dia, banyak lagi all the fast food. So because their name, their brand is already accepted by the public, it becomes the culture of the culture in Malaysia, for example, especially in KL. Maybe in a week they will find 2 or 3 or 4 times to eat a fast food kan. So it's norm for them to have KFC or McD, KFC or McD. So newcomer not easy to enter the market. And then pricing, the profitability yang ni pun kena calculate, the gross margins, the margins of the products, look at apa nama dia, the cost that involved, and then the price that we want to put, and what are the profit margins. Okay, the profit margin average 20 to 50%. Okay, profit margin, the maximum is 50% lah. Like our cost is 50 ringgit, and then we sell our product 100 ringgit. That is the maximum. Okay, or the cost is 50 ringgit, we sell at 70 ringgit. Okay, so 100 is maximum lah, the profit margin. So and then other types of margin lah, the quantitative part. Okay, selected accounting terms, and now the entrepreneur need to know these financial terms, the accounting terms. Okay, because they have to plan their financials, they have to prepare the financial reports later on. So all of this will be included in the financial plan and also financial report. Okay, and these are very important lah. For example, cost of goods sold, takkan tak tahu nak jual berapa, isn't it? So cost of goods sold is the direct cost of producing a product or providing a services, direct cost. Okay. Then gross profit, revenues less the cost of goods sold. Gross profit margin, gross profit divided by revenues, and net profit, dollar profit left after all expenses, dapat net. Kalau gross, dia tak perlu nak tolak kepada all the expenses. Okay, so these are all the terms. I think you have known these terms, and it's quite familiar if you are accounting or finance a student. Senang je kan? And then after that, the other terms that we have to be familiar with, or the entrepreneur need to be familiar with, is return on asset, ROE. Okay. And under return on asset, how to calculate return on asset is net profit margins. You need to know net profit margins, net profit divided by revenues, asset intensity, the total asset divided by revenues, the reciprocal of asset turnover, and return on asset. Net after tax profit divided by total asset. Dia nampak macam ni macam tak nampak sangat, tapi when we open the annual report later on, insyaAllah we can detect how to calculate the return on asset. ROA model considerations. Okay, case 1, high profit margin and low asset turnovers. So tengok kat sini, this one net profit margin. Sah tak ni? Okay. Okay. We have this one asset turnover ratios. This one net profit margin. So case 1, high profit margin. Case 1. High kat sini case 1 high profit margin and low asset turnover. So product and services based on technological and innovations. Yelah sebab profit tinggi, sebab produk mahal. Kalau produk harga dia mahal, expensive products, they will be a high profit margin. Maksudnya profit dia tinggi. Okay, but people really to look at that products like a computer, bukan beli setiap hari kan, laptop, telephones, the technological, product lah, teknologi, or car ke, that one is high profit margin and low turnover. So the entrepreneur need to decide, need to know this, whether their product or their services is it a high or low profit margin. And case 2 here, low profit margins, sikit je naik. Maksudnya dia punya cost, dia ada cost tapi dia naik sikit je, and then high turnover. Cost dia RM5, dia jual RM6. So sebab dia murah, people will, the tendency to people use it is high. So high turnovers. So example, the commodity types product and services like a food kan. So kalau cost dia RM1, biasa people akan jual RM1.50, RM2, takkan daripada, it's very, kalau let's say dia punya cost RM1 but the entrepreneur want to set RM10, so no people will buy it. Okay, so the margin for profit, it depends on the types of products. Okay, so the entrepreneur cannot just simply set a high profit, low cost, and then bila high profit margins and given low cost, and then the price very high, then people will not buy it. Okay, tak boleh. Okay, okay. Lagi satu, maybe we can differentiate in terms of product yang daily products, okay, basic needs, and product yang not a basic needs, luxury products, okay, like kasut, shoes, handbag, makeup ke apa kan. So it is low profit margin, high profit margin but low turnover. Okay. Okay. This one more selected financial terms that you have to be familiar with, or the entrepreneur. The operating cash flow is very important. Cash flow, the cash flow from producing and selling a product or providing a services. All the cash that happens to the business. Cash flow ni, cash boleh jadi cash inflow and cash outflow. Okay, cash inflow is like macam burger stall, their cash flow is very high because they sell their product cash. Okay, but if like say a shop, Pos Mehmet ke, shop the electrical shop kan, that provide debt scheme, scheme bayaran unspent, isn't it? Debt scheme to the customer, so dia punya cash flow rendah sebab they sell their product is not in cash, in debt. That's not so good to the business. Okay. Okay, so free cash, but that one is depends on the business model, how they set up, they plan to to offer that types of schemes, okay, so that they can sustain. So free cash flow to the equity, cash remaining after operating cash outflow, financings and tax cash flow, investment in asset needed to sustain the venture's growth, and debt increase in debt capital. Free cash flow to equity, cash flow relate to the capital, the equity. And then internal rate of returns, the compound rate of return that equals the present value of the cash inflows received with the initial investment. Internal rate of returns usually relate to the investment. Usually IRR ni more concerned by the shareholder. Okay, it relates to the capital. Okay, factor category financial harvest. This one ada the quantitative part that entrepreneur need to observe. Cash flow break-evens, rate of returns, and then IPO potential, the founders control. Okay, potential attractiveness of the business. Types of business tu, whether this one the founders control, whether they have a control or not. Okay, so average, high, minority, control. The founder is the CEO, the shareholder, whether the shareholder is internal or external shareholder. So it's better to have minority control over the business, not majority. If majority is very hard because all the controller or the manager have a different opinion and views. Okay, high minority is better control the business. Okay, so we basically three aspects, isn't it? The marketing, financial, and management. Okay, so next is the management, management aspect, management team. It's very important. So potential attractiveness, the experience. Look at whether the experience, their expertise, the functional areas, the flexibility or adaptability and entrepreneurial focus. Yang ni tengok macam ni, experience, expertise, average, macam mana? Ni this one average requirements lah for the entrepreneur. Okay, if they want to appoint the management team, like say they want to interview to becomes a HR manager. So first element is experience, average general je lah. Tapi they can set up to have a good experience. This one just average. Okay, so maximum is good. How many years? 5 years experience in HR. So expertise, look at the background, the education background, their market experience, and then functional areas based on areas lah the management team ni, HR, accountant, sales, okay. So most covered lah all areas. Flexibility, able to adapt. So the team ni must be able to adapt. Like say this year they becomes a HR manager. So after that, if next year if they been transferred to becomes sales manager, whether they can adapt or not. So adaptability is also important for the management team. Entrepreneurial focus, founder lah. Okay, maksudnya the founder ni maksudnya the management team ni must have the team must have ability to run, to become entrepreneur. Okay, average dia, the founder must have that ability, okay, on the entrepreneurship. But if overall the whole teams able to becomes a good entrepreneur or have entrepreneurial skills, that's better. Okay, at least founder need to have. Okay, so VOS indicator, the average scores, this one just given by the expert lah in the US. They give high potentials, average scores, dia bagi scores je lah. So ideas that have the potential to become high growth, high performance, average potential, low potential. The scores is calculated based on yang macam ni. The financial tu tengok ni average, tapi tak apalah. Okay, this one not so important lah. But just need to look at all the elements here. Okay, key elements of a business plan. Now we want to prepare a business plan. Okay, so what is the business plan? Business plan is a written document that describe the proposed products or service opportunities, current resources, and financial projections. Business plan is a document. Okay, if you meet entrepreneur or CEO of any business, you can ask them, do you have business plan? If they say I don't have any business plan, that's terrible lah. Mustahil business tak ada plan. Okay, so business plan is very important. Even our life pun kena ada plan kan. Okay, so if without plan, we hard for us to achieve success. Sama juga dengan business. Okay, must have a cover page, should identify the venture and provide the name, kena ada name, address, and the phone number of the entrepreneur or other contact person, office number ke, the cover page. And then confidentiality statement, example, this business plan contains information considered proprietary. By accepting this business plan, the recipient acknowledge. Okay, lagi satu, kena ada this one macam format of the business plan. Executive summary, business description. Later on you can read the business plan that I have attached in Google Classroom. Marketing plan and strategy, the target market and customer, competition and market share, pricing strategy, promotion and distributions. So everything must be declared in the business plan. So if you want to want to apply for financings, somehow the banks will need us to submit our business plan. Okay, for them to know the overall of the business. Okay, then operation and support, the quality targets, the technology requirement, the service support, and management team. Who are the management team? Who will manage the business? Who are the CEO, the board of director, the managers? Okay, and then their experience and expertise, the structure, the IP kalau ada. And then financial plan and projections, the financial aspect, the income statement and balance sheet, statement of cash flow, break-even analysis, funding needs and sources. Okay, risk and opportunities, possible problem and risk, real options, opportunities. So the entrepreneur not only have to calculate how many profit that they want to get, but they also need to think about what are the risks that they will face. And then the appendix lah, detail support for financial forecast, timeline and milestone. These are the format for the business plan, okay, that you have to do in your group assignment. Okay, that's all for chapter 2. Okay, so after this, I will proceed with the business canvas. Business canvas actually will detail up the business itself. Okay, and then for your group assignment, I will set a date for you to submit what are the business that you are going to plan. Okay, what are the types of business? You have to find, you have to choose one business. Okay, the products or the services. Okay, and then I want the group leader to present. Okay, maybe next class I want to hear your ideas, the product that you want to plan. Okay, so let's discuss. So far, okay, chapter 2.
So far, so good, Doctor.
Okay, Alhamdulillah. Okay, I stop sharing first. Okay. Sharing. Okay, I want to stop the recording.